US President Donald Trump has announced what he describes as a historic shift in America's approach toward Venezuela's vast oil reserves. According to Trump, Venezuela is expected to hand over between 30 and 50 million barrels of crude oil to the United States, an amount valued at roughly $2.8 billion based on current global oil prices. This announcement follows recent U.S. military actions in Venezuela, which Trump claims were aimed at removing President Nicolás Maduro from power and restoring political stability in the country. Trump has stated that the oil will be sold at full market price and that the proceeds will be managed under U.S. oversight. He argues that this approach will benefit both American taxpayers and the Venezuelan people, claiming the funds will be used to stabilize Venezuela's economy while strengthening U.S. energy security. Trump has repeatedly emphasized that American oil companies possess the technical expertise and financial strength required to revive Venezuela's collapsed oil industry, predicting that U.S. firms could be fully operational in Venezuela within the next 18 months. However, many energy analysts and industry experts remain highly skeptical of these claims. Venezuela's oil sector has been in decline for more than 2 decades, with production falling sharply since the early 2000s due to years of mismanagement, corruption, sanctions, and a severe lack of investment. While Venezuela holds the largest proven oil reserves in the world, estimated at more than 300 billion barrels, its ability to extract and refine that oil has been severely damaged. Much of the infrastructure is outdated, pipelines are corroded, refineries are barely functioning, and skilled workers have left the country in large numbers. Experts warn that restoring Venezuela's oil production to meaningful levels would require tens of billions of dollars in investment and several years of sustained effort. Even under ideal conditions, analysts say the process would be slow, complex, and vulnerable to political instability. As a result, many doubt that Trump's plan would significantly increase global oil supply in the short term, despite the bold claims coming from Washington. Another major point of tension surrounding Trump's announcement involves China, which has been one of Venezuela's largest oil buyers for years. Trump has openly criticized China's role in Venezuela's energy sector and has insisted that Venezuela should cut ties with Beijing and deal exclusively with the United States. Chinese officials have strongly condemned these demands, calling them a violation of Venezuela's sovereignty and accusing the U.S. of using economic pressure and military force to control another country's natural resources. China's reaction highlights the broader geopolitical consequences of Trump's plan. For Beijing, Venezuelan oil has been an important source of discounted heavy crude, well suited for Chinese refineries. Losing access to that supply could push China to rely more heavily on oil from Russia or Iran, potentially reshaping global energy trade flows. Russia has also criticized U.S. actions in Venezuela, warning that Washington's involvement could destabilize the region and escalate international tensions. Despite Trump's confidence, only one American company, Chevron, is currently operating in Venezuela, and even Chevron has emphasized the need for safety guarantees, legal clarity, and regulatory compliance before expanding its activities. Other major oil companies such as ExxonMobil and ConocoPhillips are closely monitoring developments but have not committed to any new investments. Industry insiders suggest that without long-term political stability and clear legal protections, major U.S. firms are unlikely to risk billions of dollars in Venezuela's volatile environment. The nature of Venezuela's oil itself presents another challenge. Much of the country's crude is extremely heavy and difficult to refine, requiring specialized facilities and higher production costs. This makes Venezuelan oil less attractive compared to lighter crude from other regions, especially at a time when global energy markets are already undergoing significant transitions. Critics of Trump's strategy also point to the historical context of US-Venezuela relations, arguing that decades of political interference, sanctions, and economic pressure have contributed to the country's current crisis. They warn that attempting to control Venezuela's oil under the banner of economic recovery could deepen resentment both within Venezuela and across Latin America, potentially leading to long-term instability. In the broader picture, Trump's move represents more than just an energy deal. It signals a shift in U.S. foreign policy toward a more aggressive stance in securing strategic resources, particularly in regions traditionally considered within America's sphere of influence. Supporters argue this approach strengthens national security and counters rivals like China and Russia, while critics fear it could undermine international law and provoke further global confrontation. As events continue to unfold, major questions remain unanswered. Can Venezuela's oil industry realistically be revived under U.S. control? Will American companies commit the massive investments required? How will China and Russia respond to losing influence in a country with the world's largest oil reserves? And most importantly, will ordinary Venezuelans actually benefit from this plan? Or will the country's resources once again become a source of conflict and exploitation? For now, Trump's plan for Venezuela's oil remains one of the most controversial and closely watched developments in global energy politics. Its success or failure could shape not only the future of Venezuela, but also the balance of power in international energy markets for years to come.